Welcome to Advice from the Deal Room. I'm Ben Record.
Matt Russell.
And today, we want to talk a little bit about what nobody tells you, and that the rate that you're picking is just one line on the term sheet you get. There's so much more that goes into picking the right lender. And if you pick the wrong one, you're going to find out in about 3 months that they approved you for a deal and they're now denying you for a deal after they said that they would do it. Matt, you want to talk about that a little bit more?
So, we've run into this over the years many, many times. Everybody thinks like, hey, got a lender gives me an LOI, everything must be good. Let's just stop there, right? Well, they gave the best rates and terms. And predominantly, you go 5 years ago, that was pretty much the case, and they could live up to those terms. I mean, you could throw anything at the wall and it would stick. Literally, lenders were flush with cash and willing to lend.
Well, especially with where rates were at. I mean, we had the lowest rates we've ever seen.
Yeah, but they were flush with so much cash from all the PPP, EIDL, all the other government assistance programs that were running through the COVID era that they had so many deposits they had to lend it out. And they wanted to get those loans out there. So they were being very highly competitive with rates because it was, it was a supply and demand issue. And most of the deals, even then, just would pencil and make sense. And their credit committees were they were loose then at that point. When we get into the stage of the economy where we're at right now, the cycle of the economy, things are much tighter. Banks are very tight today. They're not flush with deposits. They're looking for deposits at the same time they're looking for loans. They need that whole relationship because they want to lend out part of your deposits back to yourself. And the rates environment, somebody might be out there giving out term sheets with great terms and everything like that. But the biggest thing you care about today, and what you should care about in any rate cycle, any rate environment, any economic cycle, is surety. Is can this deal get close with this lender? That's probably the number one thing that is missed by borrowers sometimes and missed by other brokers. And even in the beginning for us, it was missed. But that's a skill set that we have learned that, hey, if I have one lender here, I better have some backup lenders. Because I've seen things go awry in the middle of a transaction. Everything was great. And now all of a sudden there's something up a credit committee. They're not happy about one little thing and they deny it. And you're like, oh, that was a shock to everybody.
Yeah, we all already discussed those things. And here we are having to deal with this at the 9th hour. So.
Yeah, we just dealt with recently on an SBA 504 deal where the bank lender approved the deal, but then the CDC is declining the deal, and we're like, what? And their explanation wasn't very in depth of where the misalignment was. So we're trying to figure that out. So we switched CDCs, had a full package to that CDC in a day. I've normally never had to switch on a CDC, so that was a little new to us, but that is now just another tool that we've learned for the future that, hey, let's because we always vet all of our deals up front with the CDC. We send it to the bank and the CDC at the same time. So there was nothing that should have been misaligned there. But there was some things that went wrong in that transaction in the middle where our loan officer at the CDC left in the middle of the transaction and then somebody else came to pick up the pieces like a week or so later. And when you have that disconnect internally for them, it causes a disconnect back, obviously, for our borrowers and for us. So, but with that said, it just comes back to that being able to pivot. And it's really about the right lender who understands your deal, who has the ability to get it through their credit committee. And again, it's the understanding of the deal. They might try to win you up front with terms and say, yeah, we can get this close many deals like this, but every deal is different. You can't say we close many deals like this. Every deal is different. Every borrower is different. Every situation is different. Every property is different. So understanding that and really understanding the lender's appetite is where it comes into play. So do we like to pivot? No. Can we pivot? Yes. Do we pivot often? I wouldn't say often, but where we spend the time and energy is picking the right lender up front. It's because of the conversations we have with lenders throughout, the weeks and months and everything like that to understand what deals they're doing, what deals they're not. Oh, you guys, I know you just did, we're working on a truck stop. Well, we know you just did this other truck stop in a different market, not far from the market we're doing, but far enough that it's not going to cannibalize them. We're just saying pretty far away, but still within the same vicinity of Eastern Washington. And they're like, oh, yeah. I'm like, I know you do these type of deals. I know this is your appetite. because you're already there and having these deep conversations before we ever finish underwriting the deal ourselves to make sure we are sending it to the right lender and who understands the circumstances around this specific deal compared to the other one, and getting everybody on board. So when we know there's something coming, my job is, as we're gathering information, to find that lender, have those conversations before we ever finish underwriting, and making, it's just our normal routine of, I talk to lenders all day, every day, like, to make sure I understand what's going on the credit side, and then, okay, never mind, that deal's going to be coming down the pipeline in a week or two, probably not going to be a fit for them. Or, hey, this is going to be a great fit for them, whatever it may be. And then when it does come down the pipeline, I'm back re-engaging with that lender to make sure nothing changed in those last few weeks. This wasn't like 5 years ago where everything was status quo. Now we're changing like a cardiac arrest. Like,
yeah, you have really good months sometimes, and then you have terrible months,
and things change. You don't know what happened inside their portfolio the last few weeks. You don't know what happened with a recent audit, exam from the Department of Financial Institutions or FDIC or whatever, NCUA, whatever, whoever their governing bodies are. We don't know what's changed in those last few weeks. We don't know what changed. Did they lose their credit person who liked this deal, or did they hit capacity on another deal already and say, yeah, that bucket's full? So we have to keep abreast of what's going on. And that way, if we do have to pivot, we know where we take it. That's why we send it out to multiple lenders up front too. And so we're naturally pivoting up from the get-go.
So go into your process a little bit, where it was when you first started. So like when we first started AAI, we had a new deal in, we had no lenders. How's your process then versus now?
At that point, I would pull up the old Rolodex, is what we call it. Obviously, I'm not a Rolodex kind of guy. I'm an electronic guy, and just start making relationship with bankers. Start building up relationships. And even when we didn't have deals, we're just building up relationships, calling them, finding out more about them. Was it as in depth as we do now? No. But it's also, now we have a lot of relationships built up that we don't have to just start pulling up the Rolodex and calling new lenders. We're on the texting, the calling, the meeting up for lunch kind of situation with our bankers. So we had that rapport and that relationship already built. And we know them on a personal level. I always ask them, what's their kids' sports? I know one of my lenders, their kids wrestle all the time. I'm like, how's that going? When's your next, when's your next tournament coming up? Things like that. We try to get to know them. So they are quick to respond to us, but they're also going to be more honest and open with us and said, hey, you know what? I like this deal, but right now with what's going on, I'm not going to be able to hit this time frame, or hey, our credit person's just not into these deals right now. Normally this would fly, but it's not going to fly today. I want that report so when it comes back, we can get this quick and continue to pivot on the back end quickly. I don't want that 2-3 month window down the road and go, that sucks.
Yeah.
And because when you try to explain that back to a client, they go, what's happening? Why? I go, I don't know. I got to go find you a new lender. No, it's just now that it's when the situation arises, go, hey, this happened. This happened yesterday. Today it's already, this so-and-so already got it. They like the deal. We're working on it. Oh, so this is what happened. This kind of goes back to the iceberg conversation that we had with James on our last podcast of, hey, here's what happened. Telling the client, here's what happened. Here's what we're doing already. Here's what we've already done. We already had a plan in place for this exact circumstance. So they're going, oh, that's what you're doing. Instead of like, talking about, I thought we were with so-and-so. Yeah, we were, but we had to do this. No, we're keeping that conversation up front. And that transparency back with their clients is much more like they're understanding and relieved and go, oh, wow, thank God I didn't have to do that, right? I don't know what I would have done in that situation. So having that rapport is much easier, for the rapport with the clients and the rapport with the lenders to be able to do that in real time and quickly and not even miss a beat with the client's transaction is where we want to be. So they don't notice, but they notice because we're being transparent. But other than that, they don't notice from a skipping of the beat perspective.
Exactly. And I think that transparency and rapport is what helps us keep working with the same lender again and again. And a lot of times is because it's not even necessarily that we work with lenders that never have issues, but we always have someone that's communicating with us through said issues, rather than going through the periods where like a lender starts having an issue on the file and they don't want to have the conversation with you. They're so focused on not losing the deal themselves that they don't have the conversation to potentially have us help them keep the deal. And that lack of communication ends up making the problem much bigger than it needs to be. But when we have that rapport and we can have those real conversations like, hey, I want to do this deal, but I'm not sure I can get it past my credit committee. That sets it up for right away. What are we things we need to make sure we get it right for the credit committee? Is there ways we can get around that up front rather than right at the end when it comes back and tells us they don't want to do it, when we didn't hear about that the entire time through the deal?
Yes. When you have that ongoing rapport and conversations and transparency, it makes everybody, first of all, it calms the anxiety down, it calms the nerves down for us, the lender, the client, which number one is calming their anxiety, but we're able to overcome obstacles easier. We're also calmer and less anxious because we're thinking clear. Our minds are ready to go on. Oh, here's what we do. And this is part of our process. Don't worry about it. Like, here's what we've always done because we've learned, unfortunately, the hard way, these truths to figure out how to do it better in the future. And that comes back to I think we talked about in our previous podcast, how we do those closed funded, closed loss deals once a month, and we dissect everything. We try to learn, we try to get better because we're constantly trying to grow and improve for our clients and take care of their needs better than what we did before.
Well, and I think it's a good part about what a lot of people should be doing is just doing that in general. Even if you're not using a broker, you're just doing a loan and you're doing your first doing a project. After the project's done, actually do the review on it. Did it work? What could have made it a more profitable project? Where did you have headaches that you probably could have handled better with better organization? There's a lot of things we can do or we can learn in our life from doing a little bit of a post-mortem or a review of what happened. Why did it happen? And not being emotional about it, but just being real about, I was delayed on a few things, or my CPA didn't get tax returns done on time, or my lender just didn't get back to me, whatever the issues might be. And maybe it just went good, but there's still profit that you left on the table because you just didn't know enough at the time.
Knowledge, at the end of the day, knowledge is very powerful and worth its weight in gold. It is the more knowledge you have and the better relationships you have, that makes life that much easier in a transaction. It's knowledge. You're able to overcome obstacles easier with that knowledge.
So what are some key points we want people to take away when they're potentially going out and looking for a lender for a project? Where should they not start?
I'll be as nice as they can. They're residential lender. Unless they have good referral sources behind them, because most of the time, I shouldn't say most of the time, a commercial deal is a completely different animal than a residential deal. And, you need a different skill set on that. So just thinking it's going to be the same is like, oh yeah, it's going to be the same process. Now, unless they have a great commercial team that they can refer you to, or an outside person or anything like that, that's not the best place to start.
And
so that's usually not the best place to go.
Even if you can have a residential lender that can go up to 4 units, how they handle a 4-unit property is very different than a commercial lender is going to handle that same 4-unit property. That's what Matt's saying there. Is that they normally wouldn't do 5+ no matter, but if they're trying to say, hey, I can do a 4-plex with you, maybe they can, and they might have some good options and maybe better options than commercial at times, but it's a different beast.
Different beast. And you got to have different skill sets and different abilities to handle that. And, usually that's not the best place to start. Other than that, it's usually asking other people who've done it is the best place to start. If this is your first commercial loan, ask your realtor, like, hey, who do you guys use? Who's most of your clients use for commercial lending? Ask around, get some referrals from people who have done it before is usually the best way to go about it. So, because that's where things can go awry.
And starting talking at your own bank is an option, but I definitely wouldn't limit yourself there. And a little bit you have to think through the incentive structure for the person that you're reaching out with. If you're reaching out to a bank, a person at your local bank that's familiar with you because you bank there all the time, they are going to try to sell you on using their bank for the product. And that's where they a lot of times will overquote and they'll give you lots of promises, but they don't necessarily know, and they don't necessarily know if they can deliver on said promises. When you're talking with someone, when this is what they do day in and day out, they only deal with real estate investing financing, or they only deal with commercial loans, they get right into it in a different way and they won't just be quoting rates right away because they understand that so many things differ. They have to collect more information, that type of thing. So I feel like if you're getting sold on rate too early on in the process, you're probably being led down a path that may not be reality.
Because if they don't know your story, they don't understand what's really going on. They don't know here you go. Well, they said they could do it. Like, do they know your whole story? They know everything about your financials? No, but they said they could do it. Well, I could say I can do anything. And that's why we try to be more transparent up front with our clients. Like, I can give you a range of rates. I can give you these things. I can tell you how much down. Until I know more information, I can't be that precise. I can't give you a better answer. And I would rather be more transparent and honest up front with that and have somebody go, well, then I'll go to somebody else who help me out with that. That's fine. But I want to be honest that I don't know until I have information. I want to be more realistic and for you then just saying, oh yeah, here's what it's going to do. And then when something comes back and it's different, you're like, well, that's not what you told me at the beginning. Well, I didn't have any information in the beginning to tell you really what's going on.
Right. We could just blow smoke up your butt, but we'd rather be more honest and actually deliver on what we say we can deliver. That's one of the things that I've loved working here is we tell people that's our alley. We would love to help, but we don't tell them, oh, 100% we can do your deal from day one. We don't know. We have to get more information. We've done deals like it, but like Matt said from the beginning, lots of deals are different. No deals are really the same, and it's going to be a process as you go through it. Just because there's people involved, there's properties involved, and there's differences in how all of that's managed.
I don't know what I don't know until I get the information.
So 2 traps that I want to point on are, don't go to just your own bank. And why one of the values that we talk about a lot for ourselves is your bank and your lender don't necessarily need to be the same thing. Sometimes they overlap because of incentives that are aligned and getting the deals done the best way. But sometimes it's better for you to not necessarily bank with the lender that you get your loan with all the time. Maybe you have your deposit relationship with a different bank and you'd go ahead and place your loan with someone else. And that's where it doesn't always make sense, but it's one of those things where sometimes your bank where you bank and have your banking relationship with, they don't have the appetite for the type of financing you're looking for. And that's where what we work with a lot is saying, hey, we're not going to necessarily take your deposit relationship and move that somewhere. We're going to take your lending relationship and place that with the lender that's actually interested in your type of stuff. Now, again, sometimes deposit relationship goes with that because there's incentives around rates and stuff like that. But that's not always our biggest focus. Our goal is to get you the lender that's going to do your loan, not the bank that's going to bank you and do your loan. Do you want to expand on that at all, Matt?
Not really, man. I wasn't prepared for that.
Okay. You're good. It's just another thought I've thought about just because we talk about it a lot of banks that are good for managing your business banking, but they don't have all of the different lender appetites and they don't have the different loan programs or their appetite buckets change.
And again, they might know your deposit side, but that deposit person is not always the lender. And because they usually break that up in a lot of banks is they have a deposit side, they have a lending side. And yes, they might get a little glimpse into your business, but they don't understand everything because if you don't have a loan with them, they don't have your financials. All they can see is your transactions. And that might not be your full thing. And one thing this goes back to is I always think a good investor, a good developer, a good business owner has multiple relationships with multiple banks. You just never want to be caught with your pants down with one and they go silent on you because things change behind the scenes, right? So if we get that, you're going down, you're like, oh, I got my one relation with my banker. You're like, yeah, I want to move banks. I'm going to keep up with them. Well, you don't know if that's best for you. And what if that bank goes silent on you? It has nothing to do with your loan officers. There's things behind the scenes with the credit, their liquidity, other things going on inside a financial institution that has nothing to do with you as a specific borrower. And the best thing you do is have multiple relationships out there. So when things to go sideways or things happen, you have that relationship out there. And you have that build up. And that's kind of where we come into play too, is we build those relationships on your behalf. So you can then bank through one person to kill, which is us. And you don't have to build those relationships yourself. You can if you want to. That is more up to you, is building those solid relationships around. But that's where we step in, is we build those relationships, and you don't have to spend time talking to 3 to 5 bankers on a regular basis, because you know they're going to call in and check in and see how things are doing. You don't have to build all that rapport up. You can say, hey, go talk to Matt, go talk to Ben, go talk to AI and their team. They know all my stuff. And it's so much easier for that banker too, because they're like, I just reach out to them. I know they always have everything up to date. If I need something, I'll just reach out to them. And that way they're getting a one source truth, and they only have that one relationship built. It's no different than an insurance broker. When they switch insurance is behind the scenes for you. You're with this insurance company. They're just looking for what's best for you. You only have one person to talk to. You don't have to talk to everybody. So I think that's kind of where your head on that, Ben, was. I think it's, you can build that relationship, but we can build this relationship, multiple relationships, to expand your ability to continue to further yourself on the financial sector, in your businesses, in your investments, in the real estate sector.
Exactly. That was the goal, is that we would love to help take that off of your load for you. We do it already. We're happy to give you some tips and tricks of trying to do it on your own, but it's a lot to manage a lot of different lenders, and to manage the change in appetite that has nothing potentially to do with your specific business lane. I mean, you could have banks that are hurting on commercial office space in general, and so they're just kind of cutting back on commercial lending in general. And it doesn't necessarily affect that your gas station is still performing well, but they're just not interested in doing them anymore because of XYZ. There's lots of reasons, and that's where it comes with, like Matt said, talking to them daily, keeping up on them, keeping up on the relationships, managing the pivots. That's where having a good broker on your side is extremely helpful. So to close, keep in mind that appetite, culture, where they're at, speed, and structure are all other pieces that go into it outside of just rate. And you can't just pick a lender just on rate. There's lots of other pieces that can at times end up being way more costly or valuable than just rate.
The biggest thing you care about is the ability to perform. Performance tops anything else that a lender can do for you. If a lender can say, I'm going to get you this rate, but they can't perform, you never got that rate to begin with. You care about satisfying the deal and getting it done that is financially beneficial for you. And if they can't close on a said promise, then it doesn't matter. You care about, basically the end goal, which is to get that deal moving forward and closed and moving on to the next deal. And that's where making sure that is your key thing, is getting the deal taken care of.
Thank you. We hope you enjoyed this. It was a quick one today, but we wanted just to kind of give you some more insight into lenders and to why it's a moving target all the time. And you really have to be good at keeping relationships and understanding what makes them say no at times outside of your potential deal. Give us a like, follow, subscribe, and shoot Matt a DM if you have any further questions.
All right, guys. Look forward to seeing you in the next one.
Sounds good. Thanks, guys.